Okay, so let's take a look at the technical and quantitative analysis merger. Let's combine these two and let's see what we can get from it. Okay, so what we can do is to open quantsheet.org. It is basically a website for this kind of stuff, for quantitative approach when it comes to cryptocurrency. On this website, basically, if you want to take a look only at Bitcoin, it is 100% for free. You can use these charts, you can use calculator, you can also go to downloader. This is basically one-of-a-kind downloader that you can download whatever data you want. For example, you want to select Binance, Bitcoin, USDT, you can choose your time frame, for example 1 day, and you can just download it. You can select if you want to CSV or XLSX and you are good to go. But once again, this is free when it comes to Bitcoin, but if you want to change and take a look at another cryptos, you need to pay for it. But even then, it is only like $29 a month, so I think it's well worth it. So these things combined with classical technical analysis will give us great edge, in my opinion, right? We can switch to dark mode as well here, so we can get nice and dark themes on both these sides. So okay, let's start. This is obviously price. Everybody understands the price, right? This is volatility. It means how much is this asset moving, really? How volatile is it, right? All these data are from last 30 days, as you can see right here, price history, December 18th, and it started at November 18th. Okay, so we can take a look at probability, right? Right now, when we go to these dots, it basically is showing us number and percentage. If you don't understand this, it's okay, because you can click on this and it is explained what it represents. Every one of these, it is very detailed explanation, so you will understand it pretty easily. But this basically means that, for example, if I click here, and remember, this is from the last 30 days, and it is from the last 30 days on purpose, so it can be more accurate when it comes to trading. This is not like 1 or 2 year approach. This is more on the short-term side, so you can benefit from that, right? So for example, if I go here, and right now we can see 30% and price 18,300. So this is basically telling us that based on the last 30 days, there is only 30% chance that price would go lower than 18,000. But when we come to here, which is basically the current price, because right now, as you can see, we are at the all-time high when it comes to Bitcoin. We are at 23,000. This is historical highest price ever. So right now, of course, there is 100% chance that the price will go below 23,000. Once again, because this is all-time high, right? When we take a look at this mean reversion, for example, this theory used in finance suggests that assets price and historical returns eventually will revert to the long-run mean or average level of the entire dataset. So this zero level, it's basically the price which is mean for this 30-day dataset that we have. And as you can see, even when we have this crazy bull run, take a look. From the last 30 days, we have 1, 2, 3, 4, 5, 6 touches. 6 touches to the mean. And this basically represents price change. If you take a look at this chart represents percentage change in price. Each asset has its own percentage average in which it moves, so we can easily and clearly identify fluctuations to one or another side. We are not interested in whether the price change is positive or negative. We are interested in how volatile is it. So basically, this chart is telling us that if our price movement, the price change is out of ordinary, if it's to an extreme, once again, 0 represent the basic level, right? Right now, we are basically on the 0, so we are at our norm. We are not exceeding. But when we take a look at this day, December 16th, let's take a look at December 16th, right here. Right here, this is December 16th. Take a look. We went up by almost 12% in one day, right? And today, if we take a look at today, we are up 0.6%. So basically we are almost flat, right? This candle represents today, this candle represents December 16th. So we were very volatile in December 16. We were also very volatile in November 26. And what we can do is that we can watch these patterns, that what is likely to happen. For example, here where we were on the very extreme on November 26, what happened then? We were also to another extreme, right? When we are on these extreme levels, we can see very clearly that from the last 30 days, we always tend to go back to our average. Take a look. Very extreme, went back. Very extreme, went back. Very extreme, back again. Extreme, back again. Extreme, and now we are back again. So just from this chart, we can clearly see that if we will have some very strong movement, it doesn't really matter to what side. But the point is that after this strong movement, it is very probable that the next day, 2 or 3 days will be very calm and very slow. And once again, we can see it very clearly. Very strong movement, but not as strong as the previous day. And the next day, which is today, is kind of, going really nowhere. It stays flat. So basically, based only on this information, you are getting this slightly edge that you know that if we have this 2 crazy days, for example, it is not very likely that we will get a third day, right? We can get it, but it is not very probable. All-time high here. There is basically 0 chance that the price will go higher based on these 30 days. Once again, this is not 100% accurate when it comes to 0 or 100%. It is based on 30 days. But just based on these 30 days, you know that we are very overextended. Even if you take a look at these dots, you see that these dots are basically kind of normal, spread out, right? But last few days, look at the spread. 90% was 19,600 and 93% was 21,000. Now we are on the 23,000. So the move was really visceral. That is why it is pretty dangerous to go long here, to buy here. We can go higher, but it is pretty much probable that we will go a little bit lower, or we will, be on the sideways for a little bit. Then mean reversion, once again, 6 touches in the last 30 days. Look at this, absolutely overextended when it comes to mean reversion. All-time high extended from the last 30 days. Standardization, we already went down to our base point. So we can see that from the all-time high, we already went down 4%, and today is very slow. So basically everything that we have anticipated happened. Then we have frequency, and as you can see, this chart counts how many days in the past 30 days period has specific percentage change in the asset. So this basically means that if I, for example, click on this dot, we see 2% on the top and then number 3 on the right side. So this basically is telling us that we have 3 days in the last 30 days that the price went up more than 2%. It is basically between 2 and 3%. So price could be 2.4% or 2.6%, 2.8%, right? Here we had 1 day when the price went above 3%. We have 3 days when the price went above 4%. We have 1 day when the price went above 6%, and we even have 1 day when the price went above 9%. So it was this crazy day, as I showed you on the December the 16th. But here you are getting this very clear overview, and also on the negative side. So for example, we can see that we have 2 days in the last 30 days, even in this bull run, that were down by more than 5%, right? So this is volume. Volume is pretty straightforward. It's just displayed from the last 30 days. Here you can see these were the highest points and these were the lowest points, right? And you can combine it. For example, let's take a look at December 6th. This was the lowest point when it comes to volume, so no action was happening on this day, right? Let's take a look here, November 6. We were on the basically on the zero, so nothing's going on here either, right? Let's take a look here, November 6. We are basically sitting on the mean reversion, right? So you know that when all these things are basically on the zero level, you see that something is going on. It means that something will happen, because when the price is going basically to zero, it's no volume, no price change, it's sitting on the mean, nothing is going on. You know that this state cannot last for a long time, so you need to be prepared. This is basically telling us that the very strong move may come up, and it's up to you if you are anticipating a move to upwards or downwards. But the thing is that if we are sitting on these kind of numbers, you know that something is about to go down. So if you are looking on the chart, you see that maybe nothing is going on, it is quite boring, you know, nothing is happening, right? And we are here on the December 6th, and you would say, oh, this is basically normal, nothing is going on. But basically 1 week later we had this 25% pump, right? So you can get a lot of insight just from these charts, and once again, like I showed you, you can combine them, because these things are a lot of time used when it comes to algo trading and quantitative trading. These people aren't just using, you know, price and indicators and things like that. They are using stuff like this. They are using probability, they are using frequency, mean reversion, standardization. They are using all these things that they are combining with normal technical analysis or even with fundamental analysis. But these things, it is pretty hard to come by unless you are very skilled in coding, programming, and, you know, when it comes to data. But here, like I showed you, you can use this for Bitcoin, and it is 100% for free. So I think it is pretty interesting. And last but not least, also we have trend, but this is not just the trend, because when we click on this, you can see this. This graph shows how many days in the last month have positive price change and how many negative price change. Results are in percentage, blah blah blah, and this information is beneficial in times when the market is sideways for a long time and trading chart doesn't clearly show at first glance which side is stronger. It's also effective in times when the market is in trend, as we can determine the strength of the trend based on percentage ratio, meaning the larger the positive price change, the stronger the trend. So this isn't only telling us uptrend or downtrend, this is telling us exact number of days. For example, here from the last 30 days we have 64.5% positive price change. Okay, so let's try to combine this with our standard technical analysis, right? So let's pick something else. Let's not talk about just all-time high, because it is pretty obvious, but let's go to some quote-unquote normal price change, because all-time high event isn't always that common, right? So let's take a look. I'm not even looking at the Bitcoin price right now, right? And I can see some extremes here, and the extremes are obviously here. For example, November 26, right? So let's take a look. November 26, okay, great. November 26 is this. So what I would do is this. We can see that we are in a very strong uptrend, very clear to see. So I can draw it like here. We touched here, here, here. So we went up, and this was the November 26th, right? When we take a look at RSI, this point is higher than this point, so it is going down here, and we can clearly see that this is going high here. So this is divergence. It means that if the actual price on the chart is going up and the RSI is going down, so basically when it's countering the price, so once again this point is going higher, and here we can clearly see that it is going lower. So this is our first sign that there is divergence and price may be overextended. And as you can see, it was overbought for a very long period of time. That is the first thing. Then we were getting this divergence, so it was signaling us that price will go down, right? And then we have this crazy drop. Let me take a look. We were down more than 13%. So this was our previous level. This was the previous level then. This was the previous level then. So we can see that price went up, bump a little bit, then went above, retraced, then again it was resisting a little bit, then we went above once again. This was the new high. We saw that we are losing strength, and we went down and we went below the EMA, and we touched the previous level, and we touched our trend line. So now what I can do, I see that from this point to this point, which is 38 days, so more than a month, we are trending very nicely on the upside. It is very clear to spot, right? We retested this level, we retested our trend line, and we are still getting higher highs and higher lows. So we are not going below here, because once again, take a look at this: higher high, retest, higher high, retest, right? So it means that this low is still higher than this low. So we are getting higher highs because this high is higher than this high, and higher lows because this low is still higher than this low. So this is pretty straightforward trend, like from the textbook. So right when we were on this point, that was the November 26th, let's take a look at our quantitative analysis, right? So right now we can see that when it comes to standardization, we are way overextended. And what it is likely to happen when we are this overextended, as you can see, it is very probable that we will go back to our 0 point. So it basically means that the price change and volatility should not be that high in the next few days, right? When we take a look at the November 26 here, we see that we are way below the mean. So once again, theory behind mean reversion is that as the time will go by, you should always come back and retest this mean level, right? So just from these two indicators, we knew that the next few days shouldn't be as much volatile, and we knew that we need to go back to the mean. The price should bounce a little bit. We also knew that we were in an uptrend for more than 38 days, so this was also positive back then. So let's take a look. This was, let me clear the chart because it is a little bit messy. So this is our point, November 26. So we can see the next day was basically flat. Take a look at these numbers when I go through the day. Take a look. O means from open, so it is basically open, high, low, close. And as you can see, the price change was minus 0.07%. So basically we were flat that day. So it was exactly as we were anticipating, just based on this stat alone, just based on this chart, because we knew that when we are this overextended, it is very probable that we need to come back and restore our price movement, our price change, our volatility. And let's take a look at this. And as we can see, we were very much overextended below the mean reversion, minus 1.5, right? So that means that the price need to come up. And we knew that we were trending. We knew that this was our flat day. We knew that we touched our trend line. I just deleted it, but you know that we touched our trend line as well. So it was our next confluence. And what happened the very next day? The very next day we were up more than 3%. So once again, everything that we have anticipated happened. And this doesn't really mean that you need to catch this 40% move. Of course it would be nice, but if you are able to catch only this quote unquote only 3% move, and if you do this several times a month, you are golden. There is nothing more that you need, because 2% here, 3% there, 5% there, 1.5% here, and in the end of the month you made a ton of money. So once again, this is just very quick demonstration how we can combine our standard technical analysis. We can combine divergence on RSI, we can combine our trend line, we can combine EMAs, we can combine our support and resistance, and then we can combine it with this, and we are getting the edge that almost nobody has, because these information aren't available in this chart. You can do it by yourself, once again, if you are skilled in Excel or in Google spreadsheets, and if you are a little bit of programmer or coder and you can work with the data. But right here you can get very quick and easy access to this kind of information, and when it comes to Bitcoin, it is 100% for free. So this is the power of the merger when it comes to technical analysis / quantitative analysis.